Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
It was a volatile day of trade on Dalal Street, with the Nifty and the Sensex ending flat with a slight negative bias. What do you do now? Do you buy, sell or sit tight? Our market experts answer all your stock queries over the next 30 minutes. Hello and welcome to a fresh new edition of Markets Today Talkback. I am Prashant Nair. Let me also remind our viewers of how they can actually get in touch with us, how they can post their queries to us. All you have to do is tweet your queries to us with the hashtag AskCNBCTV18, and we'll try to answer as many of your questions as we can. But before we do that, here's a recap of the top market headlines of the day. Another day, another flat close. Nifty fails to hold 10,150. The Sensex keeps its nose just above 32,400. ITC and RIL lend support, while ICICI Bank and HUL drag the markets. Tata Steel, ThyssenKrupp seal deal to form Europe's second largest steel maker. The 50-50 joint venture will see Tata Steel transfer $3 billion worth of debt to deleverage the India operations. The deal closure is by the next year end. Brokerages sound a warning for incumbents after TRAI decides to slash interconnect usage charges, IUC, yesterday. IUC, of course, has been slashed from 14 paise a minute right now to 6 paise. Kotak, BOAML and CLSA all feel that Idea and Airtel will feel an EBITDA pinch. They also state that Reliance Jio will be the main beneficiary. Divi's Laboratories rallied in trade today. This is as the management clarified that all previous observations for Unit 2 are complete and resolved. The company has received 6 new observations from the latest inspection, which are understood to be procedural in nature. Mahindra & Mahindra confirms CNBC TV18 Newsbreak that it has acquired Turkish tractor company Erkant Tractor for 478 crores. Transactions to be completed by November end. The Tata Group is in able hands of N. Chandrasekaran, says Chairman Emeritus Ratan Tata. He adds that the group will look a lot different in 3 decades, but it should embody the same ethical values it always has. Okay, those are the top stories that we, of course, have been tracking all day today. Let me introduce our guests very quickly. Joining us on the show to answer all your stock queries are Mayuresh Joshi, Fund Manager at Angel. We also have our technical expert, Ashani Gujral, who's joining us as well. Gentlemen, thank you very much for being on the show. Okay, before we start taking questions, let's quickly take stock of the markets today. I think bulls will be disappointed. The market basically ended almost at the day's lowest point. The Nifty chart is on your screen, 10,141. We're about 5 points off the day low today, and about 31 odd points off the highs of the day. So it's not looking all that great. Declines outnumbered advances by a margin, but it still counts. I mean, it's a broad aggregate sort of way of looking at things. How many stocks are up, how many stocks are down. Monday's Nifty breakout is kind of starting to fizzle a little bit. I mean, we saw this big move on Mondays compared to Friday's close, but there's no follow-up. I mean, yesterday, take a look at today's session, there is no follow-up at all, at least on aggregate indices. Let's dive a little deeper and take a look at stocks and sectors. So the closes are on your screen. The Nifty 6 points lower. The Nifty mid-cap down 43 points. The Sensex down about 2 odd points, as flat as they come. By the way, I mean, it was raining quite heavily overnight. It's been raining all day here in Mumbai today. Not that, I mean, you know, volumes in the market entirely depend on what people in Bombay do, but it still is an important sort of, you know, a region from where a fair bit of trading happens. And I can tell you, across in Mumbai, as far as offices, you know, fund houses, brokerages, etc. go, I mean, there were early morning advisories which had gone out telling employees to come in if it was absolutely necessary. Maybe that had something to do. But I mean, you know, look at yesterday's session, and that is only so much of an excuse. Well, take a look at sectors which did well. PSU banks, I mean, the index was up 1%. The pharmaceutical index was up about 0.25%. The FMCG index was up about 0.25% as well. Nothing large or outsized. On the losing side, while PSU banks did well, private banks were lower. The index ended down 0.5%. The real estate index was down about 0.25%. And the auto index was down about 0.6% as well. Let's get to stocks now. Take a look at what really happened. You had ITC, which was up 1.33%. I mean, this basically was responsible for almost about 15, 16 index points. ITC, HDFC, and Reliance Industries. I mean, three areas basically which contributed bulk of what happened in terms of upside gains. PSU banks, SBI, Bank of Baroda, and Punjab National Bank did well. I mean, that SBI Life IPO is on. You have pharmaceutical stocks which gained. Divi's was the big one. I mean, it started the day 1%, 1.5% higher, ended up 9.25% in the green. Dr. Reddy's was up about 3.25%. You had Suvain Life Sciences, which was up 2.33%. I mean, not a big secular move or anything of that sort, but stocks have started to turn a little bit after very large falls. In terms of large cap losses, Idea was down 4%, off the low still. ICICI Pru was down about 3%, and BPCL ended the day down about 2.5%. Old private sector banks all saw some spunk. I mean, take a look at South Indian Bank, 8.25% higher. Karnataka Bank, told us via a release to the exchanges that on the 24th of this month, they're going to look at initiatives to transform their business, quote unquote. Now, I wonder what that means. But 163 at close. Federal Bank was up about 1%. In terms of the F&O segment, the gainers, NIIT Technologies was higher, NBCC was up, and you had something like a Tata Steel, which was up in trade as well. In terms of losses, BEML, which has had a one-way move back up to almost 1900 plus, closed at 1871. Idea was down, and you also had DHFL, which ended down 3%. DHFL has also, I think, put on 100 rupees very quickly in the last 10 days or so. So that also gave up some of the losses. So that's basically an overall view of what really happened. Let's get to the queries now, the questions that are coming our way. As I said, Mayuresh and Ashwini are with us, and they're going to be answering all your questions. Keep them coming. The first question is from Twitter user Aditya Dikshit, who sent his query on ITC. He says that he's bought 200 shares. His purchase price is 311 rupees per share. He says he can hold the shares for the long term, and he wants to know what is the best that can be done with this holding. 200 shares of ITC bought at 311 rupees. Ashwini, what would you tell him?
You know, people often think that long term is a decision that they take. You know, long term buying in any stock has to be done at a long-term kind of level. 311 is, you know, after a decent rally. The long-term guy should have, bought ITC maybe closer to 200. So I don't think it's a great level that he has the stock at. Also, you know, this rally was there because of a assumed structural change in taxes. It'll be very difficult for him to get back to 311 even over the long term, and I don't know what that means. What I mean is that the stocks which are in fancy today, gas, NBFC, auto, you need to move to those sectors to be able to make money. Otherwise, what you'll figure out is that even after your perceived long term, you will still make, subpar returns.
Mayuresh, fundamentally, any thoughts on this one?
No, I think I'd concur with Ashwini. To a large extent, the flip-flop on the GST rates has taken a toll on the stock, where the whole business model revolves around cigarette EBITs and cigarette EBIT contributions. So to that extent, the volume degrowth that once we'll come to know in the Q2, Q3 results, I think can very well get compensated with the price hikes that ITC has done, specifically in its cigarette range, whether it's below 64 mm or above that. But largely, I think the other businesses will also take time to shape up, whether it's the other FMCG business, the agri-trading business, the hotels business. So I think it's going to be a tough ride in terms of moving up the earnings value chain for ITC. So consolidation is what I see. So the investor would really need to keep his patience if he intends to hold on to the stock for a long period of time.
Okay, Mayuresh saying you have to hold it for a really long time. It may test your patience. Ashwini is saying better to be with the winners, the sectors which are the leaders. I just want to make one quick point about ITC, which I've made earlier as well. While a lot of the focus on ITC is about taxation, I think one thing which is not talked about that much, and maybe it should be, is essentially, the health benefits of not smoking. If you do a general quick straw poll, the number of people who quit smoking because of high taxes or cigarette prices being 15 rupees a stick, you'd struggle to find any people who've quit. But you'd find a lot of people who quit because they think it's actually a better lifestyle choice. So there is that big structural maybe a change, which is a mindset change more than taxes or anything of that sort, which maybe works against ITC if you're essentially a stockholder in the company. But that is just my 2 bits about the subject rather than the stock. Let's get to the next one. Twitter user Keshav Khemani has sent us his query on Reliance Industries. He's holding 1,500 shares bought at the cost of 860 rupees per share, and he wants to know if he should hold these shares falling. He should continue to hold these shares further to avail of long-term benefits, and if the prospects look bright for him. 1,500 shares bought at 860 rupees. The stock is RIL. Ashwani?
Well, it's again not a long-term price. The long-term price was somewhere closer to 550 from where the stock broke out. Now, he has to be clear that it's a large cap stock which has already rallied almost 60% this year. So, at some point this will start to consolidate, and again he needs to add on all sorts of declines towards, levels of 750, etc. because he's bought it at a price, which I can't see on my chart. So 860 was probably the highest point. So he needs to average down if he wants to make money in any sort of foreseeable future, because after a 60% rally, I think large stocks tend to go sideways. So he should be ready to buy more at lower levels.
Mayuresh, would you agree with that?
I remain bullish, Prashant, on the stock. A large part of their core capex program is done and dusted. So to that bit, I think the kind of ethane imports that will come through is going to significantly benefit Reliance for both its plants at Dahej and Nagotne, and as well as the Hazira gas cracker. The feedstock that can get used for both the plants, Dahej and Nagotne, can have substantial amount of cost savings, as well as Hazira gas cracker will actually produce ethylene. So it actually replaces naphtha, which is a much more expensive gas, and the cost savings can be pretty large. So the petchem business, which reported numbers of around 87,600 odd crores, can be expected to grow at a very fast clip. Refining margins, the Singapore GRMs are trading at almost reasonable levels, and Reliance obviously outperforms the Singapore GRMs because of the crack spreads that it enjoys. And with that extent, I think even the refining business is looking extremely robust. With the IOC charges getting reduced, obviously Jio is going to be a big beneficiary, and the kind of cash flow impact that it can have on the standalone Jio balance sheet can be quite substantial over the next 2 to 3 years. So on the sum of parts, my own sense is that a lot of CWIP has actually got converted into fixed assets, which will start shoring up the return ratio, specifically ROE, which has been suppressed for a long time, and that will probably reflect in their cash flows and earnings. So remain extremely positive on this stock over the next 1.5 and 2 years, and a clear disclaimer: we hold this stock in our funds.
Okay, so that is the view on Reliance. Keshav, I hope that helps. I just want to leave you with one thought. There has been a fair bit of talk that because of this IUC cut, Reliance will essentially gain about 5,000 crores a year, and how it is bad for incumbents and it is great for Reliance Industries. But the question is, what does RIL, for its telecom business, decide to do with the savings? Prolong discounts, prolong offers, etc. It basically is bad news for incumbents, but not necessarily great news for RIL, because it's not that telecom venture will start to turn around faster, will start to make money faster than earlier thought. So, I mean, that's just some food for thought. But I think the bigger bulk of the business, of course, is oil and gas, and I think Mayuresh weighed in on that. Mayuresh Joshi and Ashani Gujral have been answering those queries. Let's stay with the questions. Our next one is coming in from Alam K, and he's written to us from Jharkhand with a query on Idea Cellular. He has 200 shares of Idea, and he bought them at a price of 118 rupees a share. He's been holding the stock for the last 1.5 years, which means he bought it sometime in 2016. He wants to know whether he should hold or sell. I mean, it's come off a long way from the highs of 2016, which was somewhere around 150 plus. Mayuresh, you want to take this first? Idea.
Yes, I think for a length of time, Prashant, I think I maintained my stance as an underperformance for Idea, as well as to a large extent Bharati, though Bharati's movement has been quite reasonable over the past few months. But with the new IOC rules coming through, it's going to take a definite hit in terms of Idea's top line, as well as EBITDA, anywhere to the tune of 16-18% on the top line, 7 to 8% on the EBITDA front directly. And though the merger with Vodafone will have synergies built in. I think it's a long drawn out process over the next 2 to 3 years as these synergies start playing down. So largely again, I think the kind of data contraction that we've seen specifically in terms of data ARPUs because of hyper competition from Jio has clearly got reflected in its prices. The kind of leverage that it has got on its balance sheet is clearly not aiding the bottom line at all. In fact, it has been posting losses on the bottom line, and that again is not going to be of any help because I think the spectrum payouts still remain pretty large for the sector and for the company in particular. Having said that, I think the data volume growth has not adequately compensated the kind of fall that we've seen in data ARPUs, and again the SMS and RMS share has probably dwindled to Jio on that count. So largely again, I think my underperformance rating continue as an alternate. My own sense is that with the government initiatives on construction stroke power, something like in KNR construction on declines can be looked at. Efficiently managed companies in terms of working capital, 40 odd days in terms of working capital needs. It's got a debt-free balance sheet, almost around 0.10, 0.12 kind of a debt equity for the EPC construction player, which is quite reasonable and marginal if I may put it that way. And the order book is quite reasonable at 3,400 odd crores, and the execution has been good, which has been seen in its margins and the return profile. So KNR construction as an alternate on declines can be an alternate choice.
Okay, so you have the advice on idea, and you have advice on what to do after you sell idea, which is by KNR Construction. That is Mayuresh's view on idea. Okay, let's take the next one. Twitter user Harkesh Gangwani has shares of State Bank of India bought at 280 rupees a piece. He wants to know what the view on the stock is. He can hold it for up to 6 months. I think the price today was about 270 or so. Ashwani?
See, I don't think it's going to do much, possibly even in a year. So you have to again be with stocks which are moving higher. So I would sell and move into a Yes Bank, HDFC Bank, Kotak, even IndusInd. I don't think this is going to do much. If you want a higher return, maybe move into something like an L&T Finance or things like Bajaj Finance, etc. But I don't think State Bank, or for that matter any PSU bank, is looking like it's going to outperform.
Fair enough. So get into the winners, and the winners are private banks and private sector financials. That is what the view is from Ashwani. Let's take the next one. Twitter user Raj Shah has written to us with his query on DLF. He's holding 5,000 shares of DLF, bought at a cost of 193 rupees per share, and he wants to know what he should do with these shares. This is pretty close to where the stock left off today. Ashwani, what would you tell him?
It's a very volatile stock, and plus, not the cleanest record in terms of corporate governance, etc. I think a much better stock is Godrej Properties, which of late has rallied, now in a correction. I think that has a much better odds of getting to 900 to 1,000. Probably it will outperform any rally in the real estate space. After all the rally, DLF hasn't been able to move from 160 to 200. I think Godrej Properties is a much better choice here.
Okay, Ashwani is saying move away from DLF into Godrej Properties, much better track record and better prospects as well. Marvaha is our next the next question from, and he's written to us on Twitter with a query on Bharat Financial. He has 1,100 shares of the stock, bought at 720 rupees a share. He wants to know if he should hold or sell. 720. So I think he's making what, 200 rupees or so. What would you tell him, Mayuresh? I mean, this is now tied to what happens to IndusInd Bank, but over the next 20 days or so, we should know the contours of the deal. The price basically is what is left to know.
Absolutely. I think the contours will probably reflect in terms of how the growth prospects and the valuations for the company are stacked up. But largely, again, I think if I have to pick and choose within the financial space itself, I think the corporate lenders, specifically on the banking front, ICICI Bank on declines is something that I remain extremely bullish about over the next 1.5 to 2 years. And within the NBFC space, again, I think I'll be a little bit more selective here. But if I have to take a bottom-up approach, my own sense is that Equitas on declines can also be looked at in a staggered way, because the valuation is probably looking very, very attractive on that counter with a long-term perspective.
Okay, ICICI Bank, Equitas, choice coming in from Mayuresh. So that is the query on Bharat Financial. I mean, depending on the deal for Bharat Financial, there may be just one pop left, but you can never be sure about it. So you're making a fair bit of money and you have choices which Mayuresh is giving you.